All right, let's talk about Zedge. The mobile content company just dropped its first quarter earnings, and, well, the market went a little wild. We're going to dig into exactly what happened and what got investors so excited.
And when I say wild, I mean the stock just exploded, jumping over 14%. But check out the volume. Over 50 million shares traded hands. To put that in perspective, their average day is under 100,000. That is a massive surge of interest. So the big question is, why? What did everyone see in this report that justified such a huge move?
Well, it all starts with the headline numbers. And on the surface, the story here is pretty simple. Zedge just blew past Wall Street's expectations. Let's look at the actual figures. Revenue came in at $7.6 million, which was a nice little beat over the $7.06 million analysts were looking for. But the real surprise, the thing that really turned heads, was the profit. Non-GAAP earnings per share landed at 7 cents. The expectation? Just 3 cents. They more than doubled it. A beat like that doesn't just get noticed, it gets people hitting the buy button.
But, it's never just about the headline. When you peel back the first layer, you find this really interesting trade-off happening right at the heart of Zedge's business. And this is where the story gets a lot more nuanced.
So, what's working? Subscriptions. Man, are they working. The company saw a 54% jump in active subscriptions year over year. They're now sitting at about 1.1 million paying subscribers. It's super clear their strategy to convert casual free users into paying members is absolutely firing on all cylinders.
And this right here perfectly sums up that trade-off I was talking about. On the good side, everything related to making money is on fire. Subscription revenue is up 29%, and ARPMAU, that's average revenue per monthly active user, is also up over 29%. They are squeezing more and more dollars out of each person on the platform. But then you look at the concern side. The total number of users, the MAUs, actually fell by over 11%. So what's the takeaway? Zedge is getting way better at monetizing a smaller, but clearly more dedicated group of users.
Now, that whole dynamic is interesting for sure, but it is not what caused a 14% stock pop. No way. For that, we have to talk about the real lottery ticket here. The growth story that has investors so bullish, an AI initiative called DataSeeds.
So what in the world is DataSeeds? Think of it this way. AI models are incredibly hungry for data. They need to be fed massive amounts of images, video, and audio to learn. Zedge is basically opening up its gigantic library of content and selling custom, ethically sourced, and legally cleared data meals to these big AI companies. They're planting themselves right in the middle of the biggest tech gold rush happening right now.
And you can tell management is feeling pretty good about it. The CEO, Jonathan Reich, used the term robust pipeline. In corporate speak, that means the phone is ringing off the hook. He's talking about dozens of potential customers, and these aren't small fry. This suggests that while it's small today, the interest is real and it is growing fast.
And this is the number that almost certainly lit the fuse on the stock. 25x. Zedge announced that an existing AI customer who had already placed a pilot order came back for a second helping, and that second order was 25 times larger than the first. That is the holy grail of a new business model, the land and expand. It's the most solid piece of proof we have that DataSeeds isn't just an idea, it could be a monster of a business.
Okay, so let's put it all together. What are we watching for as we head into the next quarter, and what's our final verdict on Zedge stock?
Here's your checklist for the next earnings report. First, and this is by far the most important, we need to see more DataSeeds deals. That robust pipeline needs to turn into signed contracts and real revenue. Second, can they keep up the incredible momentum in subscriptions and ARPMAU? And third, we need to watch the free cash flow. It was a little weak this quarter due to some one-off items, and management promised it would bounce back. We need to see them deliver.
So with all that said, our rating on Zedge is outperform. The core business is executing beautifully on monetization. But the real reason for this rating is the AI catalyst. That 25x follow-on order for DataSeeds gives us a tiny glimpse into a future that we think the market is just starting to wake up to. Yes, the declining user base is a real risk you have to watch, but the potential upside from the AI business, if they can execute, is just too big to ignore.
And of course, as always, this is not financial advice. This analysis is for informational purposes only, so please be sure to do your own research.